At some point, gold prices will go up so much that it doesn't even matter if they come down. In fact, I think we're already at that point. I mean, I think even if gold went back to $2,000 an ounce, I think these mining stocks are still a good deal. But gold's not going back down to 2,000. It's more likely to go to 4,000 than 2,000. And so analysts have to start, pricing this stuff in and realizing that there's tremendous potential. Now, if they don't realize it, the companies themselves will. These gold companies are increasing their share buybacks. And so if Wall Street won't buy the stocks, the companies will buy the stocks. And they have massive earnings to do it with.
In today's news recap, gold prices are forecast to rise another 8% this year. The price of gold has surged more than 40% since the start of January 2024, repeatedly shattering records. Goldman Sachs Research forecasts the rally in gold will continue amid demand from central banks. The price of the precious metal is predicted to climb a further 8% to $3,100 a troy ounce by the end of 2025, analyst Lina Thomas writes in the team's report. The team's previous projection was for gold to rise to $2,890. The increased forecast is underpinned by higher than expected demand for gold from central banks, which have been increasing their reserves of the commodity since the freezing of Russian central bank assets in 2022, following Russia's invasion of Ukraine. As well as stronger central bank demand, Goldman Sachs Research anticipates a boost to the gold price from increased purchases of gold ETFs as declining interest rates make gold a more attractive investment. Those factors may be somewhat offset by speculators reducing their net long positions on gold in futures markets, which is projected by Goldman Sachs Research to weigh on the gold price somewhat. Net long positions are currently very high as concerns of sustained tariffs from the Trump administration drive investors towards safe haven assets, including gold. But continued uncertainty, whether it's about tariffs, geopolitical risk, or fears about high government borrowing, could also push speculators to increase their long positions in gold. This scenario would drive the gold price as high as $3,300 per troy ounce by the end of 2025, Thomas writes in the report. Now we'll show you more clips of the latest interview, but first smash the subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than $4 per month, you can protect your online activity from prying eyes with the most reliable VPN on the market. And believe me, the only thing you'll regret is that you didn't get it 6 months ago. Let's get back into the episode.
They didn't care about 2,000, so I don't know why 3,000 would be much different. So I don't know if it's a number that's going to be the catalyst for investors to wake up, not only to the opportunities in gold in the bull market. Gold is now up tenfold since the low in 1999, 2000, 2001. It's outperforming the S&P. They were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, for all the, the hype in the stock market, it hasn't even beaten, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then yeah, I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver because the central banks haven't been buying silver because they don't really have a place to store it. So they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. I mean, the big stocks are trading at very low multiples, low double digits, 11, 12 times earnings. And that's, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate that most of these big stocks are probably sporting PEs of like 7 or 8. Compare that to, look, Walmart, which is down 6% today, is trading at 40 times earnings. Why pay 40 times earnings for Walmart? How fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for, a fraction of the valuation of a Walmart.
In today's news recap, gold weekly price outlook. Gold has a tough week. The gold market continues to see a lot of noisy trading as the markets are trying to determine whether or not the trend can continue. Gold is currently struggling, but it is still strong from a longer-term standpoint. The gold market has been a very negative market during the last several trading sessions, and now it looks like we have formed a bearish engulfing candlestick. There is a trend line that coincides quite nicely with the $2,800 level. So we may have a week or two of general softness in the gold market, but when you look at the longer term chart, it does make a certain amount of sense considering just how noisy things have been. This past week is a little bit difficult to get a read on, though, because quite frankly, a lot of what could be going on is simple liquidation so that traders can cover other positions that have been absolutely crushed. If that's the case, then I do think gold recovers rather quickly. I will be watching the $2,800 level because it was the recent swing high, and on the daily chart, it shows the 50-day EMA as well, and a lot of noise. So I'd be very interested to see how gold behaves there. This is an ugly candlestick, but again, you have to keep it in perspective. This is a market that's basically gone straight up in the air since roughly September 2022. It's been a massive performer. So ultimately, I think this is a dip that will set up for a nice buying opportunity given enough time, but we have to wait to see when that is. Be patient. Take your time. Don't try to front run the move because quite frankly, we don't know when the pullback ends. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Trump is still selling his watches. I see those commercials all the time. Trump is a promoter. He's a marketer. He's got a lot of business partners, and they made a quick buck off of this. I was embarrassed by it. I wish he hadn't done it. But it does shine a light on the absurdity of crypto, including Bitcoin, because I don't see really fundamentally the difference between a meme coin and Bitcoin. Bitcoin is a meme. The meme is that it's digital gold. It's not, but people think it is. But at the end of the day, there's a lot more that Bitcoin has in common with Trump coin or Melania coin than they have differences. And I really think it's unfortunate that Trump has aligned himself with so many people in the crypto industry. Yes, he got a lot of money from them. He got a lot of votes. Maybe that was the difference in winning the election. You never know if they tipped the scale. But they certainly helped. But he needs to just distance himself from that now. We certainly don't want to establish some kind of reserve of Bitcoin and use government money to buy Bitcoin. That would waste all the money we've saved from Doge. In fact, I'd rather have people send Social Security checks to dead people than buy Bitcoin. Bitcoin to be a bigger waste. So hopefully that doesn't happen. But yeah, and it wasn't just the insiders. Look, there's a kid in my neighborhood, 21-year-old kid. I don't know him, but somebody sold him a house over the weekend for $2.1 million, a little house. And he said, yeah, this kid made $10 million. He's 21, so he just bought his first house. He made $10 million on Trump coin and Melania coin. But he wasn't an insider, but apparently he was watching very closely, and he bought Trump coin at 27 cents. And he sold most of it, just at a couple of bucks. He didn't have it when it was $75, but he got in and out and made himself, between those two coins. And he also was in on Libra. He made money there. He's ready. He's got some kind of program. The minute they launch, he just goes right in and buys and then immediately sells, right? He doesn't stay in very long, right? He just gets in and out. But he's a 21-year-old kid. Now, he made $10 million. Where'd that money come from? Did he add any value to society that he was able to get $10 million? No, he didn't add anything. That money came from the 10 million that somebody else lost. Right? That all these coins are a zero-sum game or a negative-sum game because there's a lot of costs associated with organizing them and promoting them and making them work. But when somebody makes money in crypto, it's because somebody else lost it. And the same is true with Bitcoin, except that the people don't know they've lost it yet. Like a lot of people have made money in Bitcoin. They bought Bitcoin and they sold the Bitcoin at a higher price, and then they bought stuff with it. Now, the reason that they were able to sell Bitcoin and buy something with it was because somebody else bought Bitcoin. Now, the person who bought that Bitcoin, since the price of Bitcoin is way up still, he doesn't realize he's lost any money yet because it's still in this pyramid scheme. But eventually, the people who still own Bitcoin are going to want to sell theirs because they're going to want to buy something. They're going to want to buy a house. They're going to want to buy a car or a boat or take a vacation or whatever it is they're going to want. And then when enough people decide they want to get their money out, they're going to realize it's not there because then the whole thing collapses. And then the people realize how much money they lost. Now, of course, if you sell now, you haven't lost your money because you get out. It's like a game of musical chairs. But when the music stops, if you're still holding Bitcoin, you lose. Right? But that's why they tell everybody, never sell your Bitcoin. Right? Who made that up? The people who want to sell their Bitcoin. They made that up so other people won't sell theirs, so they can still have a market to get out.
So what do you think of today's episode? Do you agree with Peter Schiff's prediction that gold will hit fresh all-time highs next week? Are we on the verge of seeing gold break through its previous records, or do you think it's all bollocks? And what about silver? Where do you see its price heading in the short term? Drop your honest price predictions for both gold and silver in the comments below. I'd love to hear your thoughts. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.